Welcome back to another video. Sohail here, and today I want to introduce an advanced indicator on TradingView that works perfectly and profitably. To add this amazing indicator to our chart, here we click on indicators and we search TASC directional movement, TASC 2021 directional movement with Hann, which is an editor specs indicator, and it's written by someone named Pinecoders TASC. Alright, this is the indicator, and as you can see, it's in the form of an oscillator that is moving above and below the center line, which is 0. This indicator was originally developed by John Ehlers, and it's built based on Hann function. Hann function is applied for signal processing using a fast Fourier transform, and by processing data using this function, more realistic results can be obtained. As you can see, we have a line here that is moving above and below the center line, and it changes color between blue and yellow, and also the area between the line and center line depending on the position of the line. When it's below 0, it's blue, and when it's above 0, it's in yellow color. And as you probably guessed by now, crossing of the line above and below the center line gives us signals on some changes in the direction of the market. By default, the length or look back period is set at 10, and depending on your trading strategy and the types of market movements you're interested to catch, you may need to increase or decrease the length. For example, if in your trading strategy you're interested to catch larger movements of the price and use this indicator for trend identification purposes, you must set the length on higher values. For example, if I set it on 30, you can clearly see that the noises are removed and the indicator became smoother and more consistent in showing the overall trend of the market. But if in your trading strategy you're interested to catch smaller movements of the market, in other words, use this indicator as a buy-sell signal indicator, you must set lower values for the length. The lower the length, the more sensitive the indicator becomes, and it shows reaction on every turning points of the market. In this video, we continue with the default settings, and we're going to use this indicator for catching short-term movements of the market. In other words, we're going to use it to discover some buy-sell signals. Alright, as I said earlier, the crossing of this line above and below the center line gives us some insights about possible changing in the direction of the price. When it becomes yellow, it's a bullish signal, and when it becomes blue, it's a bearish signal. But for example, here you can see that all these bullish signals not worth of trading, but on the other hand, all these bearish signals would be profitable trading opportunities. The reason is that they are in the direction of the overall trend. The overall direction here is down, so these bearish crossovers are profitable, but the bullish crossovers just signal the pullbacks. We have a similar situation in uptrends where bullish signals are profitable and worth of entering a trade, but on the other hand, the bearish signals only signal the pullbacks. Besides using price action analysis for identifying trends, which is actually the most effective way, we can also use some indicators for this purpose. For example, we can add pivot point super trend, this one, which is an editor specs indicator and written by someone named Lonesome the Blue, and it will help us with identifying trends. We just need to adjust its settings and give it a little higher length so it will be smoother and not showing the deep pullbacks. For pivot point period, we set it at 3, and for ATR factor, we set it at 4. If you're trading on more volatile assets like crypto or very low time frames like for scalping and day trading, you may need to increase them a little more so the super trend line will not change because of the higher noises. Alright, now by the help of this indicator, we are able to take only the signals that are in the current direction of the market. When the super trend is red, the market is in a downtrend, so we only take the sell signals, and when the super trend is green, the market is in an uptrend and we only take buy signals. Please pay attention while we are in a downtrend. Besides these sell signals, we have some situations like this where the line gets very close or touches the center line and then it goes back down. These are also providing us trading opportunities. We have similar situation in uptrends. When we have the indicator in blue color, it shows pullback, and then having it back above the 0 and becoming yellow, it gives us buy signal. And similarly, these kinds of situations are also considered buy signal. This method is actually a trend following strategy, and it will not work well when the market is not trending. In this situation, we may have increased false signals. That's the nature of trend following strategies, and this is true with all trend following strategies. Some performs better than others, but the fact is they are not designed for non-trending markets. Super trend is is not able to tell us if the market is not trending. It just alternate between red and green colors, and this is true also with other trend indicators. There are some trend indicators like Andean oscillator, this one, which is an editor specs indicator and written by Alex Grover, and it performs better in non-trending markets. If you're familiar with this indicator, so you know that when the orange line is above the red and green lines, the market is considered flat. You can use this indicator for further confirming your signals. For example, here, these two sell signals are not confirmed by Andean oscillator, but still it has some limitations in non-trending market because basically this is also a trend following indicator. There is an indicator that is called ADX, this one, average directional index, which is designed for identifying non-trending markets. If you're familiar with this indicator, so you know that when the ADX line is below 20, the market is not trending, and when it goes above 20, the market is considered to be in a trend. But when it comes to identifying trending or non-trending market, the most effective way is price action analysis. There is an indicator that is called double zigzag, this one, double zigzag with HHLL, which is written by Lonesome the Blue, and it helps you to identify trends and non-trending markets by the help of price action. I have a complete guide to this. There I explain this indicator and also the concepts of trends and non-trending markets, and I recommend you to watch it later because trends are the most important aspect of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.